Zydus is the next business in focus. They've reported, I mean, the Q1 is one thing, of course, that what they've done. I mean, revenue increase of a slight revenue increase, if you will, but a profit drop as well. Unseasonal rains hit seasonal brands like Nycil and Glucon-D. Before we get in, Tarun Arora, CEO and Director of Zydus Wellness on board. Let's get in Mahima to give us more details about this. Mahima.
Right. So, in terms of Q1, overall, as you rightly mentioned, unseasonal monsoons have impacted their seasonal portfolio, that is Glucon-D and Nycil specifically. They've said that rural has once again outpaced the urban demand. That's the overall demand scenario. In terms of the nutrition drinks, that still remains under pressure because people are now going out and exploring more things in the nutrition space. In terms of the new acquisition, that is the Right Bite and Max Protein, that's outperforming versus what the management was earlier expecting. So that's a positive. In terms of the overall numbers, revenue was up 2.4%, EBITDA up hardly 0.2%, margins at 18.1%. They've sustained margins in that 18% mark, and net profit was down by around 13.4%. In terms of the overall management commentary coming in, they've said that unseasonal rains has adversely impacted, but there are signs of input cost that is coming down. So that will probably going forward aid margins as well. And they're confident of sustaining double-digit growth, that is ex-seasonal brand. And lastly, in terms of where the trade channels stand, organized trade saw a growth of around 30.9%, and e-commerce also saw a good growth of around 14.5%. So this is the overall view of how Q1 has panned out for Zydus Wellness. But the key question here would be as to how the competition is picking up, because quick commerce is where the competition is coming in from, and a lot of unorganized players are actually picking up pace. And of course, what is the demand scenario looking like?
Yeah. Thanks for that, Mahima. And Hiral, when I just saw everything that Zydus and its portfolio, I thought I could do a conversation for half an hour, right? I mean, nutrition, drinks, Right Bite, Max Protein, and a clutch of other things, Absolutely. Of course. So, well, let's welcome in Tarun Arora, CEO and Director of Zydus Wellness, on the show to talk about all of this and more. Tarun, great having you. Thanks so much for taking the time out and speaking to us. A broad 50,000 feet question first. Is your opinion on demand in general, urban versus rural, and what happens to demand post this GST cuts, differing from what the consensus is? The consensus seems to be that rural is difficult to predict, urban hopefully will pick up, and post GST there will be a demand spurt.
That's a lot of questions, but first of all, thank you for having me on the show. Pleasure to be here and share my perspectives. So, first of all, I think from a GST point of view, I mean, I don't see it as a one-off thing. If you look at it, there has been an interest rate cut. There's been a reduction in income tax, especially on the lower income bracket, the starting income bracket, and now this GST cut. So the government has, over the initial part of their term, was focusing on the supply side of economics. In last 1 year, this is the third, I would say, consistent effort to support the demand. So obviously government is pushing pretty hard that the demand picks up. India is a consumption economy. The private final consumption contributes. India is one of the highest of the GDP from a PFC point of view. So obviously, I'm quite hopeful, like many others, that this will play out an important role. Now, how long will it take to fully impact? Only time will tell, but clearly this is a good intention to move the consumption up. So I'm quite excited about the possibilities, and it takes care of, and probably the government revenues will get taken care of by the increased consumption and hopefully some compliance improvements also, which may be on the periphery missing. Okay. So overall, a great move by the government.
Okay, so strong move by the government in terms of, GST cuts. So, Tarun, good morning, Hiral on this side. Now, if you have to look at Zydus Wellness's portfolio as well, and the way the demand scenario has panned out between rural and urban, where do you think the boost could come in from here on? And do you think this is something which will help the company ease the margin pressures as well?
So just to break down the urban and rural for us, we've seen, or not just for us, for the entire businesses, there were almost a couple of years when rural was really struggling, but over last 4 or 5 quarters, we've seen rural improve bit by bit, and with this actually extraordinary rains this year, it should only get better. So unless some crops are impacted, but overall, I think it's good news for rural. Overall, things should get better. Government is also very committed to supporting rural income, so it will only get better. The good thing is the urban, which has been under pressure and been taken for granted at many times. So several of these actions which have happened should also aid urban consumption. Urban economy was under a lot more pressure because it is the largest part of the organized consumption that happens. And I mean, for years I've seen 30% of consumers contributing to 70% of the packaged products, as reported by likes of Nielsen and other formats. So clearly that is a piece which has been under pressure. That's going through a lot of churn because of consumer behavior shifts, channel shifts, and several other challenges of inflation going up. And this is something which should directly get aided by some of these actions. So for us, we've got our cells into a multiple pies. So whether it's rural part of the economy, which we believe will continue to improve because most of our brands are leaders and we want to increase penetration, rural plays an important role. Similarly in urban, and where the new age consumers are seeking newer experiences, newer benefits. So our innovation engine, our new acquired products have a good opportunity of growing in the urban space as well. Max Protein, you guys just talked about. I think we are quite excited about it. Every youth. So, I mean, these are brands which are actually reaching out to young audience.
But
and,
Tarun, I get your point with rural, urban. You're saying there's a lot of potential. But if you talk about the food and nutrition segment of Zydus, that has actually showed a slower growth as compared to personal care, right? And secondly, the acquisition of Max Protein, which you mentioned about as well, that has been performing well. With all of this said and done, if you're expecting the urban population to really pick up in terms of consumption, that's the one which will support your food and nutrition division as well versus the rural right now. What is the strategy to grow that business? And secondly, you have mentioned earlier as well with regards to new product development and launches in the next 12 to 18 months. So what is that combination going to look like? What are the spends you're going to do and how much will it contribute?
So if I were to break down my food and nutrition portfolio, it's a large part of our business. Now, there are two categories which have a little bit sluggishness involved in it, and it's quite well known. The nutritional drinks overall category has been relatively slower because of the substitution that has happened over the years and concerns about it. So that category stress has been there, but that grows in the top quick commerce, e-commerce spaces. It also has grown over the last few years and more rural. So there is that also will play out a bit of role. Second piece, which has been a little bit of concern, was the sweeteners, which grows less than our total average because there were concerns on WHO coming back saying that aspartame. So we've exited out of aspartame, but those are the things which really impacted us. Having said this, there are very valuable parts in food and nutrition which continue to play out both in urban and rural space. So, for example, we've extended sugar-free into sugar-free foods with chocolates, which is only on e-commerce. We've got cookies in place. So they should meaningfully add. The sugar-free green, our stevia product, that's been growing at a consistent high double digits over a longer period of time. So there is a mix which is changing because the consumers are making choices which are different than what they were making earlier. Therefore, there is a bit of churn, but I'm quite excited about the fact that some of these things will settle and make a larger impact in terms of growth. Similarly, if I look at Nutralite, that's been a largely urban business and has been growing both in food service as well as in retail. And there we had converged the dairy business, which was the back end of Heinz that we had acquired, into Nutralite Doodh Shakti, where we've got ghee, butter, and now we've also launched cheese. We also have our base business of fat spreads and mayonnaise. So all these are adding up to a positive momentum. Obviously, personal care has been leading. We've really got that right, and that's helped us drive the momentum. But I'm quite confident that our bulk of our business, food and nutrition, where now with the new formats, the protein bars, protein cookies and protein chips coming in, will only aid to the overall positive momentum on food and nutrition side. And that's where the urban growth will contribute to as well.
Tarun, I just have one question. I mean, it happened with the big FMCG that regional brands on bhujia, on chips, etc., chipped away at the dominant market shares. Now, when I think of my behavior, or I mean, I'm still too old, but a lot of younger behavior which buy on an ad on Instagram, etc., and stuff like that. There are a lot of local, not even regional brands, local brands in Mumbai specific brands, in Delhi specific brands, which are very focused on health, nutrition, bars, drinks, dehydration drinks, so on and so forth. Is that a market that is getting added to the existing market, or is it chipping away at market of leaders like yours?
So the interesting thing is that in today's age, where the knowledge, the information is getting far more democratized, it's becoming, I wouldn't say what economists will call a perfect competition. It's not really there, but the information is far more democratically available. The price discovery, the product discovery is far more easier than earlier. And therefore, some of the new innovations, some of the local formats will have, and with the organized formats, you can quickly, get access. So obviously, the local players, the smaller innovations will get a quicker platform to reach to consumers. It's actually a good news from a consumer point of view. It puts a pressure on people like us to maintain our leadership, and therefore we have to innovate faster. Fortunately, we've seen that while the market is expanding by these guys because consumers are seeking these new experiences, we've been able to keep pace with it so far, but the pressure is pretty high and we have to innovate at a much faster pace to ensure that our market shares are protected. But the good news is that if they keep building on, there's going to be a long tail, there's going to be a stiffer competition. But the consumers will be spoiled for choice. We will have to ensure that we are able to deliver a better value to the consumers and make it more accessible in various ways. There is a behavior where there are some consumers which are seeking existing legacy products, market leaders, they're buying the bigger packs. And there is a behavior where they're buying smaller packs in the rural or in the urban space where they're seeking day-to-day choices. But this in-between market which is opened up, which is these new brands, new formats, local and with new innovations, I think that's a piece which each one of us could learn from and also participate more consciously with. And I see it as an opportunity. Of course, it's challenging, but it's also an opportunity for larger players like us to participate and show our agility to respond to this market.
All right. Well, we wish you all the best for that and more. Tarun, thank you so much for taking the time out and speaking with us today. Really appreciate your time.